am going to turn off
Ooh,
my.
look at this. We're actually live and in person. So this is Kathy Larson from Knock, and she is currently in Nashville, Indiana. Is that no, Nashville, Tennessee? You're in
I'm
Nashville,
in
Tennessee.
I'm in Nashville, Tennessee. I'm in Music City. That's right.
Music City. So I love Nashville. It's like one of my best friends lives there, and we go out and go hiking and ride the e-bikes and
Yeah.
go listen to music and eat food. I love the nightlife.
Yeah.
As
It's
long as the
super.
nightlife ends at like 9 o'clock.
I was going to say, so we don't actually live in Nashville. We live about 20 minutes south in a tiny little hallmark town called Franklin.
Okay.
And this little town is so perfect, and it allows for us to get to Nashville
Yes.
once every 6 weeks to go out for dinner or listen to some music, but we don't have to live with all the crazy. So it's
Well,
like
I
a
love that.
perfect mix. Yeah.
For this information with referral partners and friends and potential clients who might find an interest. But I think that it's very apropos right now, just because, especially, I can't speak for the whole country, but in Indiana specifically, we are seeing listings linger a bit.
Yes.
They're, not getting as many showings as everyone would love. So it's slowing down a little bit. So I think there's more of a need for the bridge loan.
Mhm.
And um, what was the other thing I was going to say about that? Oh, it's becoming a bit of a buyer's market.
Okay.
So, and it's a buyer's market with a twist. So it seems like negotiating is much more prevalent and much more successful. So talking the sellers into contributing some funds, or maybe doing a few more repairs than are required by us, just little things. So negotiating is good, but rates are continuing to be volatile and
Mhm.
a sticking point. So
Yeah.
for our conversation today, I'm going to play devil's advocate, and
Okay. I think I'm
I,
ready.
I'm just going to be the slightly disgruntled home seller, and get the ball rolling so that you can kind of explain what in the world is a knock bridge loan. So take
Yeah.
it away.
Okay. So I'll start big picture. Big picture is always the best place to start. We're going to go 10,000 feet and then we can dig in.
Yes.
So, really, at the surface, knock is all about giving your client an opportunity to buy a house and tap into the funds that are tied up in their current house to make it happen. So they can buy first, get into the new house, and then get have the time to get the old one sold. So it
I
really is that simple.
and that's what I think, and I've seen it again and again and again, is they put their house up for sale, and then a couple months go by, but what happens is they find something they want to buy,
Hmm.
and they don't necessarily want the contingency of having
Right.
to have their, because that, trying to coordinate a simultaneous closing is definitely not impossible. However, it does take a lot of coordination between all
Hmm.
parties. And if it's moving a
Right.
little bit slow, getting offers on the current house, and you find the house of your dreams,
Hmm.
there is a way to move forward. And that's where you
Yeah,
come in.
yeah, and I would say too, trying to coordinate a closing is difficult. And I'm sure this has never happened to you, but you are under contract on the new property, and your clients are also under contract to get their house sold. And then something happens, and the sale of the old property falls out of escrow prior to the close of the new property. So, knock is there to protect everyone's purchase. We are there to alleviate the stress, to eliminate the potential for not being able to close and losing out on the dream home. That's
Right.
really what we're there for. It helps provide not only some certainty, but a lot of convenience too.
So let's say that I have about $100,000 worth of equity in my home.
Mhm.
And okay, so I have this much money. So how can Knock help me if I have about that much money available?
Okay, so we lend not all of your equity, but we lend a portion of your equity. And that money is lent to you at 0% interest and no payments. Yes, so I love it when people ask me what's your interest rate because it's very easy. I just say 0%. Um, Then they take that money and it's available to them to use towards the purchase. So they can use that for down payment, closing costs, debt payoff, rate buy downs, single pay MI, moving expenses. And if you have any realtors who are watching this,
I
one of my
do.
favorites is that you can use some of the money to improve the old property and get it ready for listing. We call it home prep. So it's prepping the old home to get it listed. Because my guess is you mentioned that properties are sitting, right? They're
Hmm.
listing and they're sitting. And a lot of times it's because the house isn't ready to list.
Right.
People are still living there, the dogs are still there, the the kids are still running around, the toys are all over the floor, the carpet's a mess, right? So you have to tchotchkes are all over the wall. So what happens with knock is the agent has an opportunity to get the client into a new home right away, and then when the old one's vacant, they can get it ready for listing.
Perfect.
So they can stage it, clean it up, paint. I always tease, you're going to paint the red dining room wall that everybody thought was popular 10 years ago. So you can,
Orange. I like
or,
orange.
yeah, I can't tell you how many times I see pictures of a house and every room is a different color.
Hmm.
Bright blue, bright pink, bright green, red walls, and it's like, if you could just, as an agent, if you could just fix all that, make it more neutral, the house would sell. So
Right.
knock helps eliminate that idea of the listing sitting. And here's another reason too. So I like that you were talking about they list their house and then they find a new one they really like. Because a client goes to an agent to list their house, not necessarily because they want to list the house. They go to the agent to list the house because what they really want to do is buy a new one.
Yeah.
So let's put the power of the buy back in the hands of the client. If
Hmm.
you're ready to buy now, let's buy now. Then we'll worry about getting your last one, your old one sold.
So I really love my realtor and I don't want her to be cut out of the deal. Is
Yeah.
she still going to be able to sell the house after knock gets involved?
Yes. We are just a partner for you. So we are your partner as a lender. You still handle the mortgage. We are also just a partner for the realtor. So the realtor has still the ability to go out and help them buy the new house and then get 6 months to sell the old one.
So they have
So
six months.
they have
And
six
in
months.
those 6 months, am I still going to have to be making payments on my original house and the new house?
I know. Sounds crazy, doesn't it? How can anybody ever afford that? I know I can't afford two mortgage payments. So, Knock has a feature built into the program that part of the equity that we lend you is given to you as a lump sum so that you can handle all 6 months of that old payment without having to worry about it.
Good. Very good. So let's say just worst case scenario, like
Mhm.
worst case scenario,
Okay.
that the home does not, they're in the new home, everything's going great, they're all settled in, kids are in school, dog loves the yard,
Yeah.
and the house has not sold in 6 months. Like, what happens? Is not going to come and take the house? Like, what goes on?
Yeah. So the Knock Bridge loan is a balloon payment. So it comes due and payable in 180 days. The clock starts on the day of closing of the new property. Then the agent has a full 180 days to get the old one sold. Knock, in addition to lending the money, has also provided a backup cash offer on that old property.
Okay.
Typically sits somewhere between 75 and 80% of the value of the home. It's not a great offer, but it's there to provide some protection. So think about this. The house is listed, interest rates, they get into the new house, and the next month we start a second war. I don't know. And interest rates increase to 12 or 13%. And at the same time, they're building a women's prison right across the street from your old house. So no one is going to buy it. So now Knock is sitting there still as a backup offer in the event that it hasn't sold to protect you from all of those things. So you can either pay off the bridge loan, pull your own assets, you could refinance it, or you could opt to sell it to Knock. Knock will buy it Let's use 80%, typically where it sits. We've only lent up to 75%. We're buying it for 80, so it covers all of the loans against the property and leaves money for closing to pay out your
Okay.
realtors. So they can walk away knowing that they're going to be okay. Then, if not does buy it and we turn around and we sell it for a profit after carrying costs, we have an upside guarantee that says if there's any profit left over, we're going to give it back to the client.
You're going to give it back to the client.
We're going to give it back because that's what we do. That's right.
That's pretty that's very nice and reassuring
Yeah.
and comforting. So I'm assuming that the knock fees are just astronomical. Like how could people afford that? I mean,
Yeah. Yeah. Well,
yes, they are.
yeah. Well, there is a fee. I mean, it is a 0% interest, but we got to make some money somewhere, right?
What? It's crazy.
I know. I can't imagine. But so it's not a free option, but no option is a free.
Right.
Right? You're going to pull money out of a 401k. There are potential penalties and tax implications.
Correct.
You borrow money from your family. That's almost
Good luck with that.
yeah. Like I don't even want to know what the cost for that is. So knock does have a cost. It's 2.25% of the list price of the property. So you're going to pay your realtor still their fees, and you're going to pay knock 2.25, but it does not come out of your pocket. We're going to take it right off the top of the bridge, so you don't have to worry about that. And I also want to talk a little bit. There are a lot of ways that we can talk about offsetting that cost.
Mm-hmm.
One being the realtor being able to go in after it's vacant and clean it up and get it ready. Oftentimes they can get 2 or 3% more on that listing.
Sure.
If it's ready. But I also want to talk about the purchase side. This is a new strategy that we've been talking about recently, and it's called the 2-offer strategy. So you have a client who wants to make an offer on a new property. Their house has not sold. The only option for them is a contingent offer. When you're right, and you can correct me if I'm wrong, but when you're writing a contingent offer, you either have to offer full price or you have to escalate the price.
Yes.
Right?
Yep.
So if you have to escalate or you have to offer full price for a contingent offer, great. But I also want the realtor to write a second offer. And I want that second offer to be not contingent. And I want it to be less exactly the amount of the knock bridge loan. So let's say the knock bridge loan, if you had a $400,000 house, for knock it would cost you $9,000. So if you're making an offer on a new property, full price is $500 to make a contingent offer. Why don't you offer a not contingent offer that's only $490,000?
I'm picking up what you're putting down.
So now it's up to the seller to decide which offer they want to take. And it doesn't matter to your buyer because it's going to cost exactly the same either way.
Yes. So, in a nutshell, I would say that this may not be for everyone who just listed their home and they're waiting a couple months, but I do think it would be very helpful because the market is always fluctuating. And even in our demographic, there are certain neighborhoods that are going faster than others. And so a non contingent offer can make or break a deal.
Yeah.
And once we really take a good look at the numbers, there is that profit and loss kind of calculation that you have to do. And what's more important? Do I want to be settled and in the home and not have to worry about it? And then the painters can go in and paint.
Right.
And my realtor is great. She's got 6 months or he's got 6 months to sell the home. They're going to get, top dollar for the home once it's all spiffy. So there really is these things to think about. So do you have any ways for people to kind of explore like their options and check to see if their property is available? Because not every single home is available for a knock bridge loan, correct?
That's right. Not every property is available and not everybody has enough equity to make it work.
Right.
So the first step is for the realtors to reach or the clients to reach out to you. You have the ability to almost instantaneously find out if a property is eligible and if there's any money available. That's the first step. So you can do that right on our website. Once you have that information, the process is pretty simple. It's a lot like yours. You're going to do an application. We're going to get a pre-approval. And with your pre-approval and the knock pre-approval, they have the ability to go out and start making non-contingent offers and get under contract this weekend. It's pretty easy. But just like yours, pre-approvals are no cost, no obligation, no cancellation fee of any kind. But it does give them uh, all of the tools that they need to be able to decide if they want to move forward that way.
Okay. So the other question I have is, does the buyer themselves need to qualify in any way based, I mean, credit score, income, or
Yeah,
any of that?
you're going to be really jealous because the knock application really is just a credit score. It's a 620 credit score. It's really the only qualification for the client. Everything else is based on the house. So, unlike you, I do not have to collect income or asset information or bank statements or pay stubs. I don't need any of that.
So are you pulling your own credit report
We will.
or okay,
Yep.
I didn't know if
We
you just went off of ours or
Nope. We'll pull our own, and we just need to make sure that they have a minimum of a 620 credit score. And then for them, that's all we need. And then we will qualify. I always think we qualify the house as
oh,
well.
got it. And
Yeah.
is there any time restrictions? I mean, is this going to slow up me? Because Ruoff is pretty fast and they're they expedite the deals. I mean, we close loans in 15 business days or less. So I think most people are still writing their offers for 30 days to be on the safe side, but is
Yeah.
not going to interfere with that or slow us
Nope.
down.
Nope. Knox can be as quick as you are.
Okay.
We typically can go in as little as 12 days once we have disclosures out. A 30-day is always safe when you're using knock because you need a 1 week runway on the back end for some like 3-day rescission period stuff and
Sure.
but a 30-day close, if you guys can get your clear pretty quickly, we can follow right along.
That is
Yeah.
lovely.
Yeah.
So I am assuming that the website is there's a consumer portal. Is it just knock.com or what is
Yeah.
the
Yep. Just plain just knock.com. They
okay.
can go out there, they can poke around, they can see what Knock's all about, they can read
Okay.
the reviews, the testimonials, they can check us out on Trustpilot, see what people are saying. I would always welcome that. We have
Nice.
closed quite a few loans now with Ruoff and your loan officers. So it's been a nice partnership. All of your team knows how to handle a loan that's coming through with Knock.
We're pretty
You guys,
smart.
yeah, you guys are all certified partners. Like it's going to be smooth sailing. So your realtors can reach out to you and know that they're not going to have any trouble for sure.
So as the realtor, do they also have a portal or access or a place to go to peruse everything? Or
Yeah, same thing. So
okay.
everything that we have is available out on the website. You don't need any kinds of logins or credentials in order to access it. So
Okay.
I would encourage everybody just to go out there and poke around for sure.
Well, that is lovely.
Yeah.
I appreciate the information, and I do believe that it will be very beneficial. So, I
Mhm.
will share this far and wide to my huge audience of 4 or 5 people now that I have.
Perfect.
So.
Well, now hopefully you'll get another 4 or 5. So we'll have doubled
No, we're booming.
your
We're
viewers.
going
Yeah,
we're going places.
yeah, I love it.
Well, thank you so much. And is there anything else you want to add before I shut this thing down? Shut this show down?
No, I don't. I think you've covered everything. You played a great devil's advocate, and I can't wait for everybody to look me up next time they're in Nashville. I'm always up for a good cup of coffee.
Yeah.
So let me know.
All right. Thank you. I appreciate it.
You're welcome. We'll see you later.
Bye bye.